Maximus Analysis here for August 2nd, 2016. We're looking at potentially them testing very quickly the breakout area 2134. They got down to 2141. Again, there's a ton of stops underneath that, and I think they go to test the 2100 to 2080 area, which I've highlighted here. And if you look at it, again, that might seem far, but is it really far? Looking at this action right here, they're going to break these levels. They came very, very close. And somebody might say this is the dip to buy. I'm not buying this dip. Okay, I'd rather it come to my levels and come to my conditions versus just chasing things. So we'll continue to watch. Again, if you look on the weekly, they just gave a break of that 2151 that I stated yesterday. And looking at here, you could see that they've, this candle is well from being closed. So we'll continue to watch. And this would not be where I would look to go long anything. Again, the weekly will give you more perspective on where we're looking to go. 2080 now, does it look like it's far? Not really. So I'm looking at the higher time frames to give me perspective versus looking at a 60-minute or 30-minute. Again, if you use the 60 or 30-minute, you're going to have your bearish and bullish biases a little bit quicker than this. With that being said, let's continue to look at the NQ. The NQ gave about 30 points away. Nothing crazy, but again, we want to see if they're going to hold below last week's low. And if they break that, I think they could easily come down and test the 4550, 4500 level. YM, again, just coming back again, will be another retest of this midpoint of 17,900, which we've been covering for, I would say, about how many years now? About a year and a half on the videos. So again, that's what we're looking at. CL, we could say that this is the line of sand is 3809. Again, a couple closes under that, and they go to retest that. But that's where I'm looking for this inverse head and shoulders to give me perfect symmetry and low risk to get in. And that's pretty much it regarding the indexes. Looking at gold, again, gold guys, if you're in, again, the newsletter that was sent out on Monday morning got in, you could roll your stop to break even, or if you're in the options, you can roll the option. Okay, I did a video, educational video on that, so hopefully you understand what I'm saying in regards to that type of move regarding gold. Now you also have TLT that is still hovering above this gap. So again, they could continue to push this one up, and we'll be looking at how this is going to pan itself out on the on the weekly time frame. Again, using just the basic tools of saying, okay, here was the last sell, they got above it, now they're holding it, and this is the pivot. Well, no, this is the pivot high right here, small pivot. Again, we want to continue to see how they're going to be moving. Make sure we're again looking at the higher time frame and looking at what we got going on to the left, not just 3 months worth of data. It's just a harder way to trade, in my personal opinion. Okay, so let's look at a couple of names that we saw going on. Again, Apple stated that we're at the top of the channel. Do not take the long. It's just a low probability, high probability actually for the short side. So we're going to see where this goes from here. I don't care if earnings were last week. Again, I would not go long here because, again, it could either continue, come and break these lows, which, again, this is after earnings, so it really hasn't broken even the trend channel down. So I would stay away from that one. Amazon, again, we have levels above here. Also noted on the newsletter that 800 could be the magnet, but again, they're moved so much from this low that again, I think they just need to retrace back to this, under $700 range. That doesn't mean it can't go any higher, but I tell you this, it definitely does not. You do not want to get something like this going into there. But we'll continue to watch this. But this is, again, layering above here and seeing how deep the retracement. We'll see where it goes from here. But this is the weekly chart. We want to make sure we're looking at things properly. Google. Again, it's at the 800 mark. I got big resistance of 821, but it's already looking like, again, I want to see what this candle looks like to trade either the top of this channel and see what type of volume we got. And I know there are a lot of people, which they have a very valid argument saying that volume is really not a key factor in things. And I understand that because, again, things can go up and drift up on volume. Again, I try to look at volume at key areas and see when there's significant volume versus it drifting up. You see, I was just drifting. I want to see where it starts and where it ends. So that's where I'm looking at versus just if it can go any higher. And people say, oh, the volume's light, but it'll keep going. You got to look at more than just one single thing. Okay, you got to look at the, how things are holistically with the market. You have Tesla that's giving us a report next week. This week. It can go anywhere. Again, I would be more inclined to say that it's going to go down, but again, it's the earnings, so you can get surprised either way. And Facebook, I have, again, look at the newsletter if you don't have access. You should have access to it. If you're watching the videos, please let me know. I will actually give you access to the folder that has all the newsletters. But in one of my first newsletters, I actually stated and did some education in regards to grinding pattern versus healthy trend type of movements. So you will kind of recognize that and go from there. I'm actually going to link not this week's newsletter, the week before that newsletter. And that's when I was really banging the table on not chasing the move. And reason why is because, again, there's so much euphoria. And that's not just, again, that's not a, look at extremes, look at extreme motion and where the price action comes within it. So, again, and if you miss a move, that's fine. But if you're going to take the breakout or not, there's a bunch of cup and handle guys, with this type of, cup and handle. The handle means you got to put your stop here. So don't start saying, oh, this is the cup and handle that you see on your IBD and, investors think you got to be able to put your stop where it is. And that's why I don't use them, because not only do I think that they fail because I think they fail because the stops are so close below that they can just come test right here and easily run it back up. Plus, you're not putting the risk management in place when a lot of people do them. Now, that doesn't mean that they don't work. What I'm saying is that the faults of them is that I usually, on a breakout, I'm usually trimming my position versus starting my position. So we'll see what happens and what continues to happen with the markets. Again, I will leave a link in the description for 2 weeks ago newsletter. And if you want to be on the distribution list, please email me at MaximusAnalysis@gmail.com. I'm in the process of getting all the website and everything sorted out. But the newsletters are important. Again, I give, and if you've been following me, you know that I give unbiased commentary, and I try to give levels that you need to watch continuously. And again, today's levels were very simple in regards to, there was I think it was 62.75, which it broke, and then I had another one of 51. So the level below that is 20.39.5. So again, it's just having these levels and kind of seeing where things are going. But this is the 15-minute chart on the ES. So you can see if you faded that at the open, you pretty much got a majority of the move, or at least you had a level to kind of know that you're leaning against. And it's not just the level, but where the price action is previously. Look at that. So you're saying you have a move here, and you just for your intraday guys, you have a move here. You look at this, and you say, okay, I have a move here from this bottom, and it was held here, came down, broke down below. You can put your stop above here, or if you faded that 62.75, I believe it was, then you didn't really take that much heat. Once it came back down, you could have taken the short. So again, it's just looking at the price action, and that's why I don't have a lot of moving averages, because I don't want you to get so harped on where it's at in regards to 5-day, 10-day, 13-day, 21-day, 50-day, 34-day. What is a price that you see now? Okay, where do you see the price in regards to the move, not the moving average, but the actual price action? Because the moving averages are derived from the price. So if you want to lay those on, lay them on after you've done your assessment to see if it lines up. If it lines up, you take the trade. Take care. So we'll see what you do in the overnight action, and go from there.